Hello, folks. My name is Eric Wilkinson. I'm here with Pro Trader Strategies Market Commentary. We're going to be basically talking about the markets. We're going to talk about the geopolitical environment, the economic data, how all that comes in to impact the markets. Give us a market analysis, right, folks? And then I'm going to talk about some option strategies that I implement into my portfolio based on those assumptions we come up with. And for you folks, I've streamlined that process for you to find the optimal option strategy for any given assumption. We don't just go out there and say, hey, I got a bullish assumption, I'm buying a call. No, we have to look at the pricing. Be a good steward of capital and know when something is expensive and something is cheap. And I show you how to spot that quickly in my webinar. So please check those out at protraderstrategies.com. Finally, hit that subscribe button because we're going to be doing these videos live. That way you will get a notification when we're ready to go. And I'm going to be shooting for around 11:30 Eastern. Yeah, we're a little bit late today, but I was playing around with some of the technology here, trying to get used to it. So we're going to be shooting around then. Subscribe button will give you a notification. Smash that like button for me. It really does help. And finally, check us out at protraderstrategies.com as we are going to be creating all kinds of new content for you folks to start trading. All right, so without further ado, let's get on with the economic data. Across the pond, not a whole lot going on here, but something I was talking about yesterday, and that was the Fed talking about rate cutting back on the asset purchases, which would ultimately allow interest rates to rise. I'm going to dig into that here in a little bit here as well before we get too far along. The only thing that really came out here was our jobs openings through the JOLTS number. That showed that there was 9,300,000 job openings for folks out there looking for a job. That is the biggest number we've seen since 2007. I think that's when the number actually came out, was right around the financial crisis. And that number showing the biggest amount of openings in the history of this number. So that's even through the financial crisis, folks. And we also got the NFIB, which is the National Federation of Independent Home Builders. That came off a little bit to 99.6, expected to be 101. Now, we've seen that number quite elevated for some time, starting to see that come off a little bit here. And that's probably due to higher prices. Interest rates were starting to creep up during that time. That makes it very difficult for a person that was looking at a specific home. When those interest rates rise, that means that you have to pay more every month, right? You might not necessarily be able to afford that. All right, so with that said, crude oil moving a little bit higher today. It's getting close. It's tested that 70 a couple of times, but it looks like we might be losing a little bit of momentum here. The Fed talking about raising interest rates or allowing interest rates to rise could give a little bit of strength to the dollar as we are looking a little bit, our economy is looking a little bit stronger than the broader global economy. So that is giving a little bit of strength to the dollar, causing a little bit of weakness here in gold futures. Now, Bitcoin has been struggling. We talked about this yesterday, right around that 36,000 area. That was an area of support where we were finding a lot of buyers coming in there. That buying momentum seems to have lost a little bit. And Elon Musk, on to his other memes with getting angry with, I think, Apple today, sending out some stuff. That's actually putting Apple in the thumb screws right now. Bonds, they're moving higher. Now, remember, yesterday we were talking about the Fed, and they signaled they are going to start talking about letting these rates start to rise, stopping the purchases. So what happens, when we're looking at interest rates, okay, folks, when we're talking about the bonds here, I'm going to try my little pen here, see if this works out with the new technology here. So what we're talking about with interest rates, folks, when the Fed is in there buying assets, all right, that means this is an asset. So what we're saying is the Fed is buying bonds, all right, that drives price higher. So if we are looking at price moving higher, you can think about it as a teeter-totter where interest rates are then going down, all right. Now, as we were watching this market come off, that meant that interest rates were going higher. The Fed was buying during that whole time, trying to support these interest rates. So when people are talking about the Fed suppressing interest rates, this is what they're talking about. When they come in and buy bonds, that basically, because it's like a teeter-totter, drives interest rates down a little bit. So that's what we're seeing. We're actually seeing the 10-year interest rates at 3-month lows right now. So all of this asset buying, if they stopped that buying pressure, what would happen? Well, bonds would start to go down, and that means interest rates start to go up. That's why that's really important. When we were talking about when they stop that asset purchases, that's the signal that interest rates are going to go higher. Now, what they're trying to do is signal to the market saying that we're going to talk about talking about that. So they're trying to signal, hey, we're going to, at the end of the year, basically, we are going to start really coming up with a schedule as to how we are going to go about this. There is no plan at this point. It's only that we've got this little idea that we're going to all start talking about it with each other. And then let's move on to the VIX. The VIX is just continues to slide. And as we're seeing these premiums in the options start to slide as well, very difficult to find really high priced options right now. And I show you how to spot those in those videos. We'll talk about that here in a little bit. All right. We've got the Nasdaq actually in positive territory. It's been in negative territory for the better part of the morning during the day session anyway. Dow Jones Industrial Average. When I started firing this up, folks, we were all in negative territory and now just popping into positive territory. We are finding this as a resistance area right here at 42.32 in the E-mini S&Ps. Now, we're going to need a break and really test this 150 Fibonacci extension to really get these bulls back in the game right now. It's really kind of petering out. And we are going to be keeping an eye. This is very sure to start switching to this higher level, basically from 3,400 all the way up to close to 3,200. That's where time is being spent. We're going to see that move. That means price accepted at a higher level. That's pretty bullish, folks, when we start seeing that paradigm shift higher there. And then when we look at the breakdown of the mini S&Ps, pretty sloppy overnight. We were all over the place. And coming into the day with that economic data that we were getting, not very good. Was not really giving anybody any confidence as far as I'm concerned, especially with the small business index coming in lower, the higher job openings, and nobody is going and looking for a job. Those things are going to be things that could cause some angst in the overall markets. Now let's talk about a couple of trades that I've done. Actually, we've only done one trade that I'm going to talk about, and that is here in Toyota Motors. We can see that when we're setting up with this trade, I'm looking at a good swing trade, and there's a couple of gaps higher here in this underlying where we have gapped. And usually when we are looking at charts, we always look for, or swing trades, we're looking for these types of chart setups in these gaps where the market hasn't traded. It's going to want to print those prices sometime in the near future. It doesn't guarantee it's going to happen in the next couple of weeks, but now we're seeing this weakness. We've got this topping doji, and on top of it, we've got the confirmations going on right there. So that is a confirmation of a top at this point. I think we're going to look to cover at least one or two of those gaps on the way down. So with that said, I went in to the shorter duration options, folks. And the reason why I went into those shorter duration options was because I wanted to limit that theta decay, or I wanted to exploit that theta decay. When we're buying options, I want to exploit that theta decay. But when there's options that are extremely cheap, like we're seeing right now, we don't want to be buying those options, or sorry, when the when the options are really cheap, folks, we are looking to get those options where we can exploit. When we buy options, they're really cheap. We can see that theta decay is really low, like we're seeing here in Toyota. When it's really low, we want to buy those options. When it's really high, we want to sell those options. And what I'm doing with when I sell options, I want something on my side, and that's that thief in the night that comes and steals our premium theta. So I want to get that theta on my side. So I went into the shorter duration options, and I sold the 295 calls in there for a dollar. I think it was $1.85 right now. So I am looking at it staying below $200, right? We've seen it top out. It's had a massive blow off to the upside, gotten that volatility expansion. I want to take advantage of all those levers and pulleys. So with that said, if I have a bearish assumption in an underlying that has high volatility, I need to look at something that where I'm collecting a credit for it. So with that said, if I'm collecting a credit for something like Toyota Motors, I need to sell that option with high premium. All right. That theta decay, that thief in the night is going to help me out for the next 30 some days. And I will see if I see this volatility continue to come out. That's what's jacked up those premiums to those elevated levels. All those things come out at the same time. We will see this trade turn around very quickly. So looking for Toyota to have a little bit of a pullback and cover a couple of these gaps in that. If I get that move, the directional assumption will help me out with my premiums going down due to delta, because delta for every dollar, I'll lose that premium. And theta, every night that goes by, theta will come in and pick my pocket. And finally, I've got volatility. When I'm in this trade, I know that those premiums are extremely expensive, so I'm taking advantage of that high premium. So I want to sell that, and when those premiums come out, I can buy it back for cheaper. So sell high, buy low when you're doing options. It's what we're looking at for this. All right, that's all I got for you guys. Again, please make sure you guys subscribe to us as we are going to be doing these lives. You'll get a notification. We're going to be trying to do it right around 11:30 Eastern. And then finally, smash that like button for us. It really does help us out. Comment at the bottom if you have any questions, comments, or anything else. I'd love to hear from you. You know, this is one of my favorite types of setups where I'm looking at a hangman doji or a hammer at the top or a bottom of a move, and then that confirmation where we've gotten on a bearish move, that big red candle, or on a bullish move, a big green candle right next to those hammers or spinning tops. Those are my favorite to look at. I'd love to hear from you. So please comment down at the bottom. All right. Other than smash that or take that. Bye for now. Everybody, y'all take it easy now.